bellwether, Google, once again had buy ratings put on it today to $850 because they feel that forward looking over the next couple of years, the rollout that they've been building out for the last 3 years is going to finally give revenues. We have waited for Google to get back up here. It's taken multi-years, but what we want to do is simply feature 749.99. Now, when it hit our price target of 725, we were looking for a pullback so that we could get that next leg higher, which potentially would move up to 775. However, when you're is overbought short term, things like to come down and give people a chance that are on the sidelines to get in the name. So far, this particular name has gone parabolically up. It's never traded as good in its history as it is right now, mainly due to 99.9% of that trade is by a high-frequency computing machine that keeps driving the prices higher, does not let people in for a pullback. And when you understand high frequency, it's like human would chase a human. So the machines are set to geared, and they do compete with each other in buy and sell scripts. And the reason why we can get to these phenomenal highs in a very short term is because those high frequency model computing machines are working in that buy and sell script. So therefore, as we continue to move higher, at some point in time, what we would be looking for is the very same thing that we've seen on Apple. It gets way overbought. Apple hit our target at 705 and we got off board and sold into it. Yes, we did. And it's not that Apple will go higher than 700 again. But we had to sell into it because in the short term, Apple was overbought, and we bought down here toward these bottoms. And we also bought what we felt was favorable on our behalf is that the bigger money supply, as long as they're not willing, and what do I mean by that? The big institutions, that's your money supply. And as long as they're going to hold out because they believe that Apple's going to 800, well, you're not going to see a lot of that kind of selling. Yes, it was a wonderful move down to pre-market of 682. Intraday low was 683. We popped to that 695. That was $12 up off that bottom. We featured on buying that dip, and that was on how the Apple went. However, we can see that on the other hand, the big bellwether over here, Google, hit 730.25 and ran $19.74 off of that low in that high frequency buy and sell script model. At some point, just as Apple did, and I'm using the reference so that people can have a clear in the picture, we're not saying that Apple's a bad stock or that Google's a bad stock. Google's one of our best stocks, and so is Apple. The thing about it is, all we're saying is to be mindful that at times they get extremely overbought and they will have some big reversal days. Apple's done it several times. One time it did it $100 for us and we bought it really cheap. This name here, which is a great name, we need to see the name drop $50 so that we can get more entries and trade it up to the 775 area. And that these high frequency program machines, they bid the prices up higher. They chase each other in the price script. That's how we get the phenomenal intraday high. But it's good because when those machines are doing that and you're long, it's working for you. However, we are in a territory of where the high frequency program computing buy and sell cycles are reaching very extreme areas of where stocks have a lot of higher risk and price at those price levels. So once again, we're going to say the same thing here. Once this name does pull back, whenever that day is, but the pullback has to be at least $50 over time. And we would love to see it drop in after hours earnings so we could buy this stock again at much lower levels, just like we always look at doing on most of the big names. And whether it was buying like we did over here, CMG at 290, buying that thing all the way up. We shorted it, price lines off of their original lows that made great moves way up off of their bottoms, is that Google would return to where some kind of market volatility or headline volatility would create a good sized pullback so that people could get in this bellwether, because this thing could trade a lot higher. We've said it for a number of years. And the thing about it is, long term, up and out of the money calls that were being bought at 770, 800, that was the place to be for very little dollars. And they want to keep it going higher. But what we like to do is that when it gets to certain levels, we would like to trade very short term with the price movement. And that means that people that are getting the calls are working good for us are up $14.50 right here. That's the biggest one-day call that we have seen when they came out with the $850 price target. The calls were inflated already, but they did go to $26.39. And this side here is really at risk of all of this call value that gets pumped up here could just disappear in one day. And I'm not joking. Just like all the calls that were here in this contract, this was a weekly contract, 928 in Apple, but it was 1940, got down to 780. Yeah, we bought it and we sold it. And the thing about it is that this is the headline news. This is that pullback that lets the people that were sitting on the sideline buy these dips like that. It will be in a trading range from 690 down to 680, 150. And could easily happen at various different times, but each dip will be bought for those who have sat on the sideline. That's what we look to see what happens in Google. And we have a 52-week calendar multi-year high, and we have it with an upgrade that came out today. And then we had electronic buy and sell script and high-frequency computing cycles that generate these buys and then chase the buys on top of buys on top of buys, and that's how you get to these extreme phenomenal intraday price levels. So as a market maker that we are in the very short term, we know that these things have to have reversals just like Apple did now. We're just using this one as a reference. And this is what we're looking for this name to do between now and after whenever it reports earnings. Tentatively, I'm hearing the 11th. However, that may not be the date, so you'll have to check it up. October 11th of 2012, it could be a different day. But we have seen some reports that say, tentatively, that's the day they report, and that's on a Thursday. However, in pricing, as we're going here live, is where do these things, from these phenomenal price levels that are totally out of the ordinary and high frequency, and upgrades in the headline news and all of the stuff that these high frequency models are working on, either to drive prices higher, stack the ask higher, chase them up higher. Now, if you know how to work it right, at some point they do what Apple does. Apple went up to 705 and hit a low today at 683. Look, every great bull run has to have that in the pricing model of the equity. And that's where the bulls that were on the sideline would come in and buy the dips on Google right along with you once that gap down price, whatever day that may be. We're closer to a top all the time right now, I can tell you. And when you get to the tops, to verify them, they have to have $10 reversals intraday or they're not verifiable. The distance on the reversal side of overbought equities have to have $10 reversals and very high beta at multi-year highs, 52-week highs for the calendar. Multi in a row in the last 3 months, still in it. And I showed it on a monthly chart. It's on our website. So we would caution people that at times you want to be able to get that other side of the market that has to come down. You want to be able to get those profits. And that's where the calls go too high up and the puts go too low. And you get to that wall of phenomenal resistance when these high computing machines are driving those prices higher before they have days like what Apple has. This one will have it too. It's not going to be today. It had the big upgrades, but we're telling people that one of our near-term targets again was 752.75, and we got to 749.99. Okay, so once again, it's an awareness, and it's awareness that we like to give people about high frequency is that these phenomenal moves that you see today is where the machines walk these prices higher for you. But you have to be trained on how to do it and put it in your favor, and you can. But at some point, you have to have big reversal bars when they get overbought. But you have to have it where the people that are on the sideline are looking for a reason to buy the name. However, the 3-month bull breakout rally to the upper end of the price level, right there, let's just call it 750. And this is your first intraday reversal of 200 pennies. No, when you are going to verify price volatility changes, the long distance is $10, but the shorter distance on this name is it starts and then it drops 350 pennies, $3.50, and then goes down to minus 500 pennies, which is $5 off of the high, and then works its way down to $7 and then to $10. That's when you could say that that overbought process is starting to finally show some resistance. It would only be verified like that. What it means is that every support level we've driven to new 52-week highs, because we have. And that the intraday side of the reversal side is right now you're making, $2 on a intraday short, and you would simply cash in and be out. Okay? And that this put side over here is a 745. It's $3 above it. We can see that the low is 540. They were 1180 on the high, $6.40 range. So basically what we're looking for is the put side over here. That's a 750. 7.6 is a low, 820 by 860. 1770 was on the close with 1445 bought. The high was $16.30 here on that 750, which is no longer, it's right slightly below the money now, but it was right at that money. And we can see that the money flow is 52. We can see we got 3 million shares here. We got $19.74 in this big move. And this is how high frequency can drive those prices on an intraday level to phenomenal highs. And they also did that in a very short term to 705 here on Apple, but from 705 down to 683. Those are the kinds of things that we're talking about. Use this as an example that this is forward-looking of what Google will do the same. At some point within the price channel, it'll be a headline event. It'll be some sort of an event. So when you have the calls and they're up here this high, you've got to be ringing a cash register on the call side, because you don't know what can happen overnight. Just like people who woke up here, last thing they expected, they never expected $700 close on Friday to 683. No, they didn't. The only reason why that really, truly happened, yeah, the reports that are out on Google, that's just an excuse. It was overbought. And this one is too. And at some point in bull and bear markets, whether they're high frequency or not, is that they do hit that final last wall of exuberance at some point. So when you're up toward the highs, it's a good time to be scaling out and a good time to be looking at the other side of the market and use the Apple as your guide as to what I'm saying needs to, what happened here, this will have to happen here. They have done it on all the big ones. We called them all. And this is going into a category that it's never been able to be in. It's never been the leader of this market until now. It was always the Apples, the Pricelines, the Amazons, the Baidus, the CMGs, MasterCard, Visa, a whole bunch of other stocks were the leader of our markets. But this was the leader that was never leading. It was only in multi-year ranges, and it's finally worked all of that off. We said one day it would. And we said one day that when the company can integrate all its products and all its lines and revenue streams would increase, those would be the days where this bellwether would be big. As far as we understand the internet and search and mobile apps and everything that they've done, is how does that all tie together to get higher revenues? That's a fundamental picture. I'm not talking, and that's a good picture. So any dips in the upcoming quarter or any sell-offs going into the earnings is what we would like to see, so that people on the sideline would buy that dip. We would buy it at the lower prices. We would trade it all the way up to the very next highs, and we would do all of that. And right here, we're in this name, Apple, and it's going to go through its normal stuff. It's got 21 million shares. But remember, what you see here, every great bull company or every great bull rally has to have these days from overbought processes. Let this be an example to you, and let this be known that this name, at some point, will have the same cause and effect in price, because it's going to hit within the price cycle to these multi 52-week highs. It's going to hit that very, very big wall of resistance where we're going to get too short-term overbought. They do got to come down. And I'm a firm believer that if I'm selling into the highs and I can buy those dips whenever they come around, I wait for them. And you have to be patient for them, for the bigger picture. For the shortest term picture, it's all about intraday range bound. And buying sell scripts and programs and breakouts and hitting phenomenal highs. And we can see here, this is the MMT platform, that's 3 deltas. That thing went up. It's only 30 cents a line today. But tomorrow, this very same value will be very big. So we're going to continue to stay on this on a daily compounded level as we go through these bull tops right up to levels where it once was. I showed a monthly chart on Google, and I was very specific of where these monthly highs were over here, and they in 748. Take a look. Let's look at this together, everyone. It's 748. We broke through it. We broke through that high right here, through this monthly bar. And ironically, we're 748.45. So, yes, this name has got room to go a lot higher. Don't get me wrong. However, we need to see, just like it was back over here in this monthly bar, this is where it all started. I was here. I was part of this short back in those days. And what I am happy to announce is that this thing has broken through there. 748. Here's the monthly high during that year. Listen, let's get it right here so you can understand it. It was, that was 747.24. Right there. And that was on let's get the date, 11/1, November 1 of 2007. I remember it. We were going into the financial crisis. This thing had rallied up from being a publicly traded company. And I always told people you would see these price levels again, and how that Google would change. And how would it change? It would only change one way. And the history of the prices, how it will move forward in calendar looking years, and how it's going to be the backbone, is that we blew through that monthly reversal high right there at 747.24. And when we blew through it, look at where we went right here, 749.99. And the call side of the market, that's the bull side. It is phenomenally inflated in price. And this is just a weekly. It's not the monthly. But still, that's an intraday level, and that is something that the high frequency breakout to those highs drove those prices there, and then on the put side it's driven them down to big lows as well. So therefore we're looking for mathematical imbalances. That is the high. The monthly chart that I just showed right here, we blew through this calendar. That's 747.24. Okay, and we're printing on the bid at 748.20, 748, and we got above it by a couple of dollars. And we're up there because you can see clearly that if I was to show you in a weekly chart, which I'll be happy to do, you will see right here that this got to 97.50, the percent DS, and these generated buy and sell scripts, they chase their price all the way up to get to these phenomenal intraday highs. But let us not forget and conclude the video that this name took out and has made compounded yearly highs. And I went to the monthly chart. I verified it, and I'll do a much slower one for you at 747.24. And that was on 11/1. It was in that calendar month of 11/1 of 07. And we remember that because we were getting short Google over here. And boy, did it ever go down. But right now, on this monthly chart, you've taken that out on this monthly bar. And this monthly bar is still referred to as September. There's 15-minute bells to the close, and I just am doing this for my new MMTs so that they can watch this video a few times on a 3-month breakout. But a stock that finally, that can take multi-years and go through lots of stuff, that Google on its earnings picture, and if we can get the dips, we want the dips to buy it now, just kind of like what this Apple did here now. And this here, when it's been in its bull all the way up to 705, it had lots of times where it would pull back from overbought process and then make all-time highs. We're going to be looking for that over the foreseeable future with this name here. And what it does at these phenomenal yearly highs, not 52-week highs, yearly highs since it's been a publicly traded company, at 749.99 using the monthly 11/2007 monthly bar, because that's where it was. And we're slightly ticking above that right now. So that means that the intraday pullbacks at support will remain strong, as every bull does, unless it's a big gap down day. What we're going to be looking for is maybe an earnings surprise that they didn't do as well in this quarter because things are still slow around the world. That would be great, because we know if things pick up around the world, well, this thing can have its pullbacks and make other all-time highs. It's a long video, but take the Apple trade for my new MMT students in high frequency of how bots can drive these to phenomenal highs at 97.5% overbought at the highs, and that support this call side of the market for a number of days going up in value, and the put side for a number of days have been marked down. When you take the time series between the call and put ratio, they're extremely imbalanced in the time series cycle in price on both long side and short side. So as this documentary is put together for you at the Google Bellwether Breakout, because we're back into bull runs and we're back into bull pricing, even though that there's a high frequency computing machine, who cares? Put that to your use. We'll train you and let them run these prices. You never know that this is going to happen at phenomenal highs, so don't kid yourself. However, they will have upsets like this did, and you will want to buy the pullbacks in this name.